Hi there, and thanks for your interest in the LizardRenko bars. In this presentation, we'll briefly discuss the general idea behind the Renko bar type, and then move on to look at the Renko Tools, the indicator that comes with the LizardRenkos. To learn how to set up the LizardRenko bars, choosing between different chart styles and modes, there is a separate link to another video in the description notes below. Okay, so one of the main motivations for developing the LizardRenko was that many of the tools available from our indicator library do not plot correctly when used with the most standard Renko bars available on the market today. We also wanted to offer Renko bars that are reliable when used for backtesting. Strategies running on standard Renko bars will typically show very promising backtest performance, but then unfortunately fall apart in real-time scenarios. And that mainly has to do with the preset grid defined by this bar type, causing the open high and low values not to display correctly. If you're not familiar with the Renko bars at all, they are popular mainly because of the visual appeal, so expanding on trend moves, whereas areas of congestion are eliminated. Minor counter trend moves are hidden within the bricks, so to speak. You also see here that classic Renko bricks have no wicks, and depending on the type you use, they may not reference the true price action, so the true high and low levels. Again, that has to do with maintaining the visual appeal, but can also significantly impact your indicator plots and backtest results. You should especially pay close attention to the reversal bar open. That is chosen to allow for the single brick size, but this here, for example, is not the real open. This here is also not the real open. So why is that important? Well, if you use market orders for your backtests, execution on these reversal bars can be several ticks off. So with the LizardRenkos, we've added the option of displaying the real price action, the wicks, showing the high and low levels, as well as the real open. And so again, here, you would think that the open was up here, but it's actually down here. Same here, you would think the open was at this level, but it's actually up here. And so if you multiply this over hundreds or thousands of backtest transactions, you can see how you will get inaccurate results. So that's just a little bit of a background info for you. If you'd like to learn more, there is a blog post that goes into this in depth. There's also a link to that in the video description below here. So coming up, we'll have a look at the various Renko tools. First, the projected high and low levels and how you can use those. Then we'll have the minor and major trend, and then also look at abnormal trading scenarios, how you can avoid that, specifically as it relates to thin markets and latency or market speed. So the Renko tools have the projected high and low levels for the current or developing Renko bar, holding the target level for a down close or a up close. Here we have a NASDAQ chart with a Renko setting 1020, so a classic 1 to 2 Renko. In this example, the prior bar here was a down close. So the projected high here is found by adding a 20-tick reversal offset to the prior close, and the projected low is calculated by subtracting 10-tick continuation offset from the close here. So how can we use that? Well, because the projection levels reference a future price. We can use it to minimize delay between signal and order execution. We know the trigger level required for a reversal or a continuation bar. We can set stop orders at those levels and thereby reduce slippage cost versus setting a market order, for example. So you can already ahead of time use these levels to set stop orders. We also have the zigzag connecting swing highs and lows. You can use that to analyze minor and major trends. It's based on bar closes, so it does not take into account the bar highs and lows. We have a separate swing trend indicator that you can set to catch those levels, but you have here already quite a bit of information available to you. You have also the swing leg and the swing volume along with the plots here. So for uptrends, you're looking for the higher high followed by a higher low and again a higher high versus a downtrend, a lower low followed by a lower high and then a lower low again. And we're displaying the major trend here in the paint bars. You can also display it with the background shading, apply that for the minor trend here in this example. So the minor trend reveals the direction of the current swing leg and will typically change direction following a Renko reversal bar. So we see that here and here and here. You can also display the minor trend change using reversal signals here. They will plot when the new leg is added to the last swing point, and again coinciding with the Renko reversal bars. Generally want to align them with the major trend. So we have a reversal going against the major trend here, and then with the trend on this one. And coming back to the projection levels, you can see here how combining the major and minor trend readings can be used to anticipate price levels that will trigger reversals in the direction of the trend. We can anticipate the reversal bar with the major trend if the lower projection level is hit here. And I will also show you how to set that up with Bloodhound and BlackBird, working with stop orders in a follow-up video. Again, link found in the video notes below here. You probably also want to avoid abnormal situations where one or several order book levels are skipped. This can happen when certain order book levels are empty or when a large incoming market order sweeps one or several levels. And so the Renko tools will allow you to visualize those situations, detecting a thin market when there's a gap of more than one tick between the close of a Renko bar and the opening price of the next, or when a Renko bar closes above the projected high or below the projected low. So when no transaction occurred at the target level and this level was skipped. That information in turn can be used to temporarily invalidate trade setups, entry and exit signals until the market returns to normalcy. These types of scenarios can be displayed via paint bars or again background shading, as I've chosen here. And you can also use sound files for audio alerts of these types of scenarios. Also keep in mind that Renko bars eliminate time. They only show price moves, and therefore certain times during news releases, hundreds of new Renko bars can plot in the course of seconds. and therefore you need to take into account the aggregated response time, often referred to as latency. Two main causes of latency: the data feed. The trade data is collected by the exchange and then passed on to the data provider, who then sends it on to you as the subscriber. And then also latency of order execution. When a order is generated by your platform, it is first sent to the broker access point and then checked against margin requirements and then sent on to the exchange. So this is just to visualize how this happens. So you have the CME data center here, passing on the data to the data provider, who may be in Nebraska, and then processed by the data provider, sending it to you in, let's say you're in Florida, and then going into the CPU and displayed on your PC. And the delay here is typically between 50 and 150 milliseconds, and then generating a order, sending it to the broker access point in Connecticut, for example, checking against margin requirements, and then finally onto the exchange. And that may cause an additional delay of between 100 and 300 milliseconds, depending on the location of your trading PC and the access point and the location of the exchange. So that is something to keep in mind. The Renko tools will allow you to specify an aggregate latency threshold. So the aggregate is the sum of the data feed latency and that of the order execution. If we look at the difference between two consecutive Renko bar timestamps, if it's less than latency, a fast threshold is reached and can be displayed via paint bars or background shading, as I have again here. This example is the market towards the end of the regular session, just illustrating why it's usually a good idea to be out of the market well before the regular close. So that just about concludes the quick intro for the Renko tools. You can, of course, access these through other indicators and strategies. As I said, I will have a follow-up video showing you how to call this with Bloodhound and BlackBird from SharkIndicators. Check out the video description below here for a link to that. In the meantime, if you have any questions, feel free to reach out via the contact form over at LizardIndicators.com, otherwise at info@LizardIndicators.com. Thanks for checking in, and I look forward to hearing from you sometimes soon. Take care, and bye-bye.